Welcome to the Recon Trader. In today's video, we will take a look at whether or not Bitcoin and Ethereum are about to fall off a cliff. We'll start with upcoming current events that could cause the price to plunge. In addition to, we will wrap up with some technical analysis on the chart. So let's jump right over to the upcoming current event. And perhaps the most critical upcoming current event is about to happen on July 17th. Grayscale will be unlocking about 16,000 BTC, and this could put more pressure on the already weak Bitcoin market. And if you're not familiar with how the Grayscale Bitcoin Trust works, basically when you invest in their shares, you can only sell those shares after a 6-month lockup period. And the most recent lockup period is about to end, and this could cause Bitcoin to plummet down to 25,000 or perhaps even as low as 22,000. So with that all being said, we'll jump over to the Bitcoin daily candle chart, and you can see we had a heck of a run up, and we have since sold off, and we are currently moving sideways, which to me, with my experience, looks a lot like the distribution phase before we decline into a bear market. It is very possible we are in this phase here, and with the possibility of the added sell pressure from the Grayscale unlock period, that could very well push Bitcoin over the cliff and sell off into a bear market. Now, if you're newer to trading and investing, especially in crypto, what this chart basically represents is the structure of a bear and a bull market. And a bull market, you'll generally have accumulation, then you'll have markup, then you'll get a sell-off into distribution where the market moves sideways, and then eventually it will decline when the sell pressure becomes too great. And so if we jump back over to the daily chart, you can see that we had accumulation, we had that run up, we have since sold off, and are now moving sideways. Now you will hear some people tell you, well, this is not a blow-off top like we've seen in the past. Therefore, there's no way we're headed into a bear market. For starters, the market can act irrational longer than anyone can stay solvent. And with that being said, I have seen markets do exactly this and roll over into a bear market. It might not have been the crypto market, but we don't have that much history in the crypto market to set a precedence for trends. A lot of these crypto experts out there that have no experience trading, they've just been perhaps buying and holding Bitcoin or Ethereum for 5-6 years. That does not necessarily really give you enough history or data to make up a trend. Now, with that being said, we could just as easily move back up, as there is a possibility we're actually back here somewhere in the bull market markup area. Perhaps this is the big run up to 60,000. We sell off, and we take a little bit of a break, and then the market blows back up to the top, and perhaps we hit that $160,000 or $200,000 or $300,000 top before truly selling off into distribution. That's a possibility as well. I'm not here to make predictions. Making money in trading is not about picking tops or bottoms. My objective is to be involved in the battle at a level that exposes me to minimum risk relative to the perceived profit potential. And so I take a look at both situations, the possibility that we still have room to run up and the possibility that we are about to perhaps roll over. Now, in my experience, I think it's more likely currently that we are in this phase and we are about to roll over, and the Grayscale unlock period could be the catalyst to push us on into the bear market. Now, if we jump over to the 1-week candle chart on Bitcoin, we still see that similar accumulation period, a run up, and then the sell-off, and now we're moving sideways into perhaps the distribution stage before the decline. And if I add in the Fibonacci retracement levels from the beginning of the bull market to the high so far, we see Bitcoin is currently having a difficult time getting above the 50% level, but the good news for the bulls is it is holding above the 618 level of the Fibonacci retracement. And so if I'm looking at some price targets on the upside for Bitcoin, the first one really has to be around the 37,000 level, and that's the level we need to break above, which you see Bitcoin has had some issues holding and staying above that 37 level. And so if the bulls hope to extend the bull run, they need to get above 37,000. And if they're able to do that, the next level we'd be looking at is where you see these wicks on the candles come in, somewhere around 41,000. If they can push above 41,000, the next level is going to be the 382 level on the Fibonacci, and that's going to be around 43 to 44,000. Now, if the bulls are able to charge through this level, then we could talk about the possibility of the bull market continuing, and then we could be looking at the possibility of moving back up towards the all-time high of 65,000. Now, on the flip side, if the bulls are unable to hold the line somewhere between 31,000 and 30,000, that puts you at the 618 level, and we could even drop down to perhaps the 28.8 level, which this candle wicked down into. If the bears are able to push the price down through 31,000, 30,000, and then 28.8, then we could be headed all the way down to the 786 level, which is right around 21,000. And that would put us right back to the previous bull market's all-time high of around 20,000. And it's not uncommon for a bull market to visit its previous all-time high. And so if we do dip down to the 21,000 mark, remember, it doesn't mean the end of the bull market. But it also doesn't look very good for the bull market. And again, all probability means we're headed towards the decline portion of the bear market. And so the fact that the market is still showing bearish signs, most of my trade setups right now are short opportunities versus long opportunities. However, I have traded both sides, and I've been able to capture some profits by doing technical analysis, mainly by utilizing trend lines. And once a trend line gets broken in a certain direction, and as you can see in this situation, when the trend line was broken, Bitcoin sold off, and this was an excellent opportunity for a short. Now, with that all being said, elite traders always make sure to be prepared for movement in either direction, and that is why I always look at both bullish and bearish price targets. So now let's jump over to the Ethereum one-day candle chart. And again, we see that same type of market structure where we get the accumulation, we begin to get the markup, we get a little more of a blow off top, which again, a lot of the folks in crypto YouTube said we didn't get a blow off top in Bitcoin. Well, we get a little more of a blow off top right here in Ethereum, and then we sell off, and now we're starting to move sideways in perhaps what might be the distribution phase. And so again, jumping back over to this chart, we have the accumulation, the markup, and in this case Ethereum does look a little more like this with the sell-off into distribution. And if we continue on this course, Ethereum could fall off the cliff into the decline stage of the bear market. And so again, looking back, we have the accumulation, the markup, the sell-off into distribution. Now, does Ethereum fall off the cliff into the decline phase? We'll have to wait and see. So with that in mind, we'll jump over to the Ethereum 1 week candle chart and look at the Fibonacci retracement levels. And much like Bitcoin, Ethereum is stuck between the 618 and the 50% level currently. And Ethereum came right into the 50% level. However, it is now rejecting and starting to sell off. So what we would be looking for out of the bulls to resume the bull run would be a breach above the 50% level, which would be above 2361, let's call it 2400. From there, the next level, which has proven to be resistance, is the 382 level, or around 2800. We see wicking above, only to continue to pull back. So we'd want to see the bulls with some volume push above the 2800 level, and then they could be free to charge all the way back up to the 4000 level or new all-time highs. Now, the more likely possibility, given the current structure of accumulation, markup, the sell-off into distribution, that it appears to be what we're looking at would be a decline into the bear market. And so what the bears would be looking to do is to push this price down below the 618 level and more than likely close below 1700. And if Ethereum closes down below 1700, you could see the price drop down to around 1400 where we see previous support. Or we could be looking at the 1200 level, which would be the 786 level on the Fibonacci retracement tool. And if the bulls don't step up and start buying at 1200, we could see a free fall into the triple digit levels starting with probably around 900. So with that all being said, what the technical analysis shows me currently is we're more likely to see Bitcoin and Ethereum fall off the cliff into the decline phase of a bear market. That's not to say the bear market couldn't just be for the summer and then the bulls come back in the fall when the bears go to hibernate and we run back up to all new time highs. In the end, I rely on the charts to help me with my battle plan when it comes to investing and trading. So I will continue to do updated videos regarding Bitcoin and Ethereum's price action. So now would be a good time to shoot that subscribe button so you don't miss those future videos. If you like this video, do me a favor, spike a like. If you have any questions or comments, drop those in the comment section down below. And in closing, remember, never send your money into battle without first doing your recon. See you in the next video.